You think your biggest problem in trading is the market. It isn't. It's not volatility. It's not manipulation. It's not lack of capital. It's not even your strategy. It's your habits. And the uncomfortable part, most of those habits don't feel wrong while you're doing them. They feel normal, productive even. That's what makes them dangerous. Let me ask you something. How many times have you told yourself, just this one trade, after breaking your own rules? You didn't call it a mistake, did you? You called it an exception. That's how habits begin. At first, it's small. You move a stop loss slightly. You enter a little early. You hold a losing position just a bit longer because it might come back. Nothing dramatic happens. Sometimes you even get rewarded. And that's where the trap closes, because the market doesn't punish you immediately. It teaches you the wrong lesson slowly. So now your brain starts building a pattern, breaking rules, sometimes profit. And once that equation settles in, discipline stops being natural. It becomes optional. Have you noticed that? Let's look at it clearly. You don't blow up your account because of one bad trade. You blow it up because of repeated behavior that felt harmless each time. That's habit, not strategy failure, not bad luck. Repetition. And repetition is powerful. It builds identity. So now you're not just someone who sometimes breaks rules. You're a trader who doesn't fully trust their own system. Do you see how subtle that shift is? Now here's where it gets deeper. Most traders think habits are formed during trading hours. They're not. They're formed long before you even open a chart. Your daily life bleeds into your trading decisions. If you procrastinate in your work, you'll hesitate in your entries. If you avoid difficult tasks, you'll avoid cutting losses. If you chase comfort, you'll chase trades. So ask yourself honestly, are you trading differently from how you live? Or are you just expressing the same patterns in a faster environment? Think about your job if you have one. Do you wake up excited to solve problems, or do you just go through motions? Do you do what's required, or do you cut corners when no one is watching? Because trading is the same thing, except now, no one is watching at all. There's no boss, no structure, no immediate consequence. Just you and your habits, and that's why so many people fail here. Not because trading is hard, but because it exposes who they already are. Here's the uncomfortable implication. If your habits are weak, trading will magnify that weakness. If your habits are sharp, trading will reward that precision. There's no hiding. You can't talk your way out of a bad trade. You can't explain your losses to the market. It doesn't care about your reasoning, only your execution. So what happens when your execution is inconsistent? Your results become random, and random results destroy confidence. Have you felt that? Winning one week, losing the next. Never quite knowing if you're improving or just getting lucky. That's not a strategy issue. That's habit instability. Now let's talk about your toxic job, because some of you are trying to escape it through trading. You hate the structure. You hate the repetition. You hate being told what to do. But here's the irony. Trading demands more discipline than any job you've ever had. No one tells you when to stop. No one forces you to follow rules. No one limits your risk. So if you couldn't maintain consistency in a structured environment, what makes you think you'll suddenly become disciplined in a completely unstructured one? That's not criticism. It's reality. And if you ignore it, trading will teach it to you the hard way. Let's make this practical. What does a destructive trading habit actually look like? It looks like entering trades without confirmation. It looks like revenge trading after a loss. It looks like increasing position size after a win. It looks like checking charts compulsively, even when there's no setup. But more importantly, it feels justified in the moment. That's the key. Bad habits don't feel wrong while you're doing them. They feel necessary. So how do you catch them? You don't rely on feelings. You rely on patterns. Start observing yourself like you would observe the market. What happens after you lose a trade? Do you slow down or speed up? What happens after you win? Do you become patient or careless? Do you follow your plan when you're calm, but abandon it when you're emotional? If your behavior changes based on your last outcome, you don't have a system. You have reactions. and reactions are unpredictable. Now here's where most people go wrong. They try to fix habits with motivation. That doesn't work. Motivation is temporary. Habits are structural. You don't need to feel like being disciplined. You need to remove the option of not being disciplined. For example, why is your stop loss negotiable? Why is your position size flexible? Why are your rules open to interpretation? Every flexible rule is an entry point for a bad habit, and once that door is open, your mind will walk through it every time you're under pressure. So tighten the structure. Define your rules in a way that leaves no room for negotiation. Not, I'll exit if it looks weak, but I exit at this exact level, no matter what. Not, I'll take high-quality setups. But I only enter when these three conditions are present. The clarity removes emotion, and emotion is where bad habits live. Now think about this. If you followed your rules perfectly for 30 days, not perfectly profitable, just perfectly executed, what would happen? Would your results become more stable? Would your confidence improve? Would your stress decrease? Of course it would. So why aren't you doing it? Because habits are stronger than intentions. And until you address the habit, not the outcome, you'll keep repeating the same cycle. You don't need a new strategy. You need a new standard. A standard of behavior that doesn't change based on mood, recent wins or losses. Because the market is already uncertain. If your behavior is also uncertain, you're compounding randomness. And that's a losing equation. So here's what I want you to consider. What if your trading results over the next year were determined not by your strategy, but by the habits you repeat daily? What if the outcome is already predictable based on how you behave today? Would you still trade the same way? Would you still justify small rule breaks? Would you still ignore patterns in your own behavior? Or would you start paying closer attention to the one thing you actually control? Because once you see it clearly, once you recognize that every decision you make is reinforcing a pattern, then the question stops being, will this trade work? And becomes, what kind of trader am I becoming? And if you sit with that question long enough, you'll start to notice something uncomfortable, not in your strategy, not in the market. The market doesn't create your flaws, it exposes your routines. You walk into trading thinking the pressure will change you. That when real money is on the line, you'll suddenly become sharper, more disciplined, more controlled. But pressure doesn't build character, it reveals it. Whatever patterns you carry into the market are the ones that show up when decisions matter most. Think about it. When a trade starts going against you, what do you actually do? Do you calmly follow your plan, or do you hesitate, adjust, and start negotiating with your own rules? That reaction didn't come from the market. It came from you. The market simply gave it a stage. You don't become impulsive because price is moving fast. You discover that you were already impulsive, just hidden under slower environments. Trading removes the delay between decision and consequence, and suddenly your habits have nowhere to hide. If you're someone who avoids discomfort in daily life, what happens when a trade moves into loss? You avoid closing it. You hold on, not because it's logical, but because cutting it feels uncomfortable. The market didn't teach you to avoid pain. You brought that tendency with you. And if you're someone who seeks quick rewards, what do you do after a winning trade? You look for another one immediately. Not because the setup is there, but because your mind is conditioned to chase the feeling. Again, the market didn't create that urge. It revealed it. This is why two traders can use the same strategy and get completely different results. One follows it with precision. The other bends it under pressure. The difference isn't knowledge, it's behavior. And behavior is built long before the first trade is placed. Look closely at your routines outside trading. Do you finish what you start, or do you jump between tasks? Do you plan your day or react to it? Do you stick to commitments when no one is watching? Because trading is exactly that. Commitment without supervision. When you say, I'll follow my plan, you're not making a promise to the market. You're testing your own consistency. And if your daily life is filled with exceptions, delays, and justifications, those same patterns will appear in your trades. The market is brutally honest in this way. It doesn't care about your intentions. It responds only to your actions. So if your routine is built on shortcuts, your trading will reflect shortcuts. If your routine is built on discipline, your trading will reflect discipline. You might think your problem is strategy, but ask yourself, do you actually execute the strategy as it is written? Or do you modify it in real time based on how you feel? Because if your execution changes with emotion, then your real system isn't your strategy. It's your habit loop. Notice what happens after a loss. Do you step back and reassess, or do you rush to recover? That impulse to recover quickly, where does it come from? It's not about the trade. It's about your relationship with setbacks, and that relationship was formed long before you opened a chart. The same goes for patience. Many traders say they struggle with waiting for the right setup. But patience isn't something you switch on during trading hours. It's a reflection of how you handle waiting in general. If you're restless in everyday life, you'll be restless in the market. So the real question isn't, what is the market doing to me? It's, what am I repeatedly doing, regardless of the market? Because once you see that your actions follow patterns, and those patterns follow routines, you start to understand something critical. Changing your results isn't about finding better trades. It's about changing the behavior you bring into every trade. And that shift is uncomfortable because it removes the excuse. You can't blame volatility. You can't blame manipulation. You can't blame timing. Small rule, breaking repeated, becomes your trading identity. It never starts with something dramatic. You don't wake up one day and decide to ignore your entire system. It begins quietly. You bend a rule just a little. You justify it. You tell yourself it's situational, temporary, harmless, and most of the time, nothing immediately goes wrong. Sometimes it even works. That's where the real problem begins. Because now your mind has evidence that breaking the rules isn't dangerous. In fact, it might even feel smarter than following them. You start to believe you're adapting, not slipping, improving, not drifting. But are you really improving, or just getting comfortable with inconsistency? Think about the first time you moved a stop loss further away. It didn't feel like sabotage. It felt like giving the trade room to breathe. That language matters, because the words you use determine how you see your actions. You didn't call it a mistake. You called it management. And once you rename a mistake, you remove the urgency to correct it. Now that behavior repeats. The next time you're in a similar situation, your brain doesn't resist. It recognizes the pattern. It remembers that you've done this before. It feels familiar, and familiarity feels safe, even when it isn't. So what was once a one-time exception becomes a second decision, then a third, then something automatic. Have you noticed how quickly that happens? You don't think about it anymore. You just do it. That's when it stops being a decision and starts being a habit, and habits don't ask for permission. Here's where it gets serious. Every repeated action is shaping how you see yourself. At first you think, I'm a disciplined trader who occasionally bends the rules. But over time, that shifts. You become someone who tries to follow rules, but doesn't always. Then someone who follows rules only when it feels comfortable. And eventually, someone who relies more on instinct than structure. Do you see the progression? It's subtle, but it changes everything, because your identity determines your default behavior, and your default behavior shows up under pressure. When the market moves fast, you don't rise to your expectations. You fall back to your habits. So if your habit is to override your plan, that's exactly what you'll do when it matters most. Not because you chose to, but because you've trained yourself to. This is why small rule breaking is so dangerous. Not because of the single outcome, but because of what it teaches you about yourself. Each time you ignore your system, you reinforce the idea that your rules are optional. And once something becomes optional, it's no longer a rule. It's a suggestion. And suggestions don't hold up under pressure. Now ask yourself something honestly. Do you trust your system? Or do you trust your ability to adjust it in real time? Because those are two completely different approaches. One is structured. The other is reactive. And reactive traders don't build consistency. They build narratives. They explain trades after the fact. They justify decisions. They convince themselves that what they did made sense. But the market doesn't measure how convincing your story is. It measures how consistent your execution is. Look at your recent trades. Not the outcomes, the behavior. How many times did you follow your plan exactly as written? How many times did you adjust something mid-trade? How many entries were truly within your criteria, and how many were close enough? Because close enough is where identity shifts. It's where standards start to blur, and once your standards blur, your results follow. Here's the uncomfortable truth. You don't need to break rules often to damage your trading. You just need to break them consistently enough that your brain accepts it as normal. And once it's normal, it no longer feels like a problem. It feels like your style. That's when traders say things like, "This is just how I trade." But what they're really describing is a collection of unchecked habits. So the real issue isn't whether a rule break works or fails. It's whether you're reinforcing behavior that you want to keep repeating. Because every action is practice. Every decision is training. And whether you realize it or not, you are constantly training yourself to become a certain kind of trader. You don't lose discipline in one moment, you leak it daily. Most traders are waiting for a dramatic failure, a big loss, a clear mistake they can point to and say, "That's where it went wrong." But it rarely happens like that. Discipline doesn't collapse all at once. It fades quietly, in small, almost invisible decisions that feel too minor to matter. Have you noticed how it starts? You skip a part of your routine. You don't review your trades. You glance at the chart instead of studying it. You tell yourself you already know what you're looking for, so you move faster. Nothing breaks immediately. In fact, it feels efficient, but what you've really done is lower your standard. And once the standard drops, even slightly, it rarely comes back on its own. The next day, it's easier to skip another step. Not because you decided to be careless, but because you've already proven to yourself that it's acceptable. That's how discipline leaks. Not through rebellion, but through quiet permission. You don't wake up and choose inconsistency. You drift into it. Think about your last few trading sessions. Were you fully present, or were you just going through the motions? Did you follow your process step by step, or did you compress it because you've seen this before? That compression is where discipline starts to thin out. You remove one layer of structure, then another until what's left is just instinct dressed up as experience. And instinct, unchecked, is unreliable. Discipline isn't tested when things are easy. It's tested in the moments where no one would notice if you cut a corner. Would anyone know if you entered a trade without full confirmation? Would anyone stop you from increasing your position size slightly? Would anyone question you for holding a loss just a bit longer? No. And that's exactly why those moments matter. Because discipline is not what you show publicly. It's what you maintain privately when there is no immediate consequence. Here's the part most people miss. Every small lapse creates a reference point. Once you've acted below your standard and nothing bad happened, your brain stores that as a new baseline. Now, what once felt like a mistake starts to feel normal. So the next time you face a similar situation, you don't hesitate as much. You don't feel the same resistance. You've already crossed that line before. And with each repetition, the line moves further. Not suddenly, but steadily. You might think, it's just one trade, or it's just today. But habits don't operate in isolated moments. They connect. One compromised decision makes the next one easier. One lapse in focus makes distraction more acceptable. One ignored rule weakens the authority of all the others. And before you realize it, you're not following a system anymore. You're reacting to situations with a version of discipline that has already been diluted. Look at how this plays out over time. At first, your rules are clear. Your execution is sharp. You're intentional. Then small adjustments begin. You rationalize them. You feel in control. Then results become inconsistent. Not terrible, but unpredictable. Then frustration builds. You try to correct it, but now your foundation is unstable. And eventually, You start questioning your strategy, when the real issue was never the strategy to begin with. It was the slow erosion of discipline. Ask yourself something directly. What are you tolerating right now that you wouldn't have accepted when you first started? Are your entries as precise as they used to be? Are your exits as defined? Is your patience the same, or has it shortened? Because whatever you're currently tolerating is setting your new standard, and your results will align with that standard, not with what you intend to do, but with what you consistently allow. Discipline is not a fixed trait. It's a maintained state. And like anything that requires maintenance, it declines when ignored, not dramatically, not loudly, quietly, in the skipped step, in the rushed decision, in the moment you say, "This time is different," without real evidence. Those moments don't feel like failure. They feel insignificant. But they accumulate, and accumulation shapes behavior. You don't need a major mistake to derail your progress. You just need enough small ones that your behavior no longer matches your plan. And once that gap exists, between what you say you do and what you actually do, your results stop being predictable. Because consistency doesn't come from intention, it comes from alignment between rules and action. And that alignment isn't lost in a single moment. Comfort-driven decisions quietly replace rule-based execution. It doesn't happen in a way that alarms you. There's no clear moment where you say, "I've stopped following my system." It feels smoother than that, more reasonable. You begin making decisions that feel right instead of decisions that are right according to your plan. And that difference is easy to miss. Because comfort feels convincing. When a trade is moving against you, discomfort shows up quickly. Tightness, hesitation, the urge to do something. So you adjust. You widen the stop. You delay the exit. Not because your system told you to, but because holding the loss feels worse than breaking the rule. In that moment, you're not managing a trade. You're managing discomfort. Have you noticed how often that happens? You're not reacting to price. You're reacting to how price makes you feel. Now flip the situation. You're in profit. The trade is working. But instead of letting it play out according to plan, you close early. You secure the gain. You tell yourself it's smart to take money off the table. But look deeper. Was it part of your system, or was it relief? Relief that the trade didn't turn against you. Relief that you can lock something in. Again, comfort. So whether you're in loss or profit, the pattern is the same. You're making decisions to reduce emotional pressure, not to follow a structured process. And when comfort becomes the priority, rules become optional. This is where execution begins to drift. You still believe in your system. You still talk about discipline. But in real time, your behavior is guided by something else. You start saying things like, "This setup looks good enough," or "I'll just manage it manually." Those phrases sound harmless, even experienced, but they signal a shift from predefined rules to flexible interpretation. And once interpretation enters the process, consistency leaves. Think about your entries. Are they based on clear criteria, or on a feeling that the market is about to move? Because feeling is often just familiarity with comfort. You see something that resembles your setup, and instead of waiting for full confirmation, you act early. Why? Because waiting creates tension. Acting relieves it. But early entries aren't neutral. They change your entire trade structure. Your risk increases. Your stop placement becomes less precise. Your confidence becomes fragile, all because you chose comfort over clarity. Now consider how this compounds. One comfort-driven decision leads to another. You enter early, so now you feel uncertain. That uncertainty makes you monitor the trade more closely. The more you watch, the more emotional you become. And the more emotional you become, the more likely you are to interfere again. So you adjust your stop. You take partial profits too soon. You exit based on fear, not logic. And at the end of it, you might still walk away with a small win or a controlled loss. Which makes it even more dangerous. Because now your brain says, that worked. But what actually worked? The process or the outcome? This is the trap. Comfort-based decisions can produce acceptable results in the short term, but they destroy consistency over time, because they're not repeatable. You can't build a system around feelings. You can't measure them. You can't refine them. You can only react to them. And reaction is unstable. Ask yourself something directly. If you removed all emotions from your trading, no fear, no excitement, no urgency, would you still take the same trades? Would you enter at the same levels? Would you exit at the same points? Or would your behavior look completely different? Because that difference is where your real problem lies. You don't need more market knowledge. You need to recognize when you're choosing emotional relief over disciplined execution. And that recognition requires honesty. Not after the trade, but during it. When you feel the urge to act, pause and ask, is this part of my system? Or is this me trying to feel better? That question alone can expose a pattern you've been repeating without noticing. Comfort is subtle. It doesn't argue with you. It doesn't force you. It simply offers an easier path. Close the trade now. Move the stop. Skip the confirmation. Take the quick win. Each decision feels small, justified, manageable. But together, they form a process that has nothing to do with your original plan. And once that process takes over, your results stop reflecting your strategy. They start reflecting your emotional habits. You don't abandon your system in one decision. You replace it, piece by piece, with choices that feel better in the moment, choices that reduce pressure, choices that prioritize ease over accuracy. A toxic job mindset follows you into the charts. You think leaving your job will fix your discipline, that once you're free from deadlines, bosses, and structure, you'll finally perform at your best. But what you're really carrying with you isn't the job itself. It's the mindset you developed inside it. And that mindset doesn't disappear just because you open a trading account. Let me ask you something. When you were working, did you do things because you believed in them, or because you had to? Did you follow rules out of conviction, or out of pressure? Because trading removes that pressure. No one is watching, no one is enforcing anything, and suddenly, the habits you relied on external structure for start to fall apart. In a job, you can get away with inconsistency. You can show up half-focused. You can delay tasks. You can cut corners occasionally and still get paid. The system absorbs your inefficiency. But trading doesn't absorb anything. Every lapse shows up directly in your results. So if you were used to doing the minimum required to get by, that same approach will appear in your trading. But now it costs you. Have you noticed that? Think about how you handled responsibility. Did you take ownership of outcomes? Or did you shift blame when things didn't go your way? Because in trading, there's nowhere to shift it. You can say the market was unpredictable. You can say the setup failed. But deep down, you know whether you followed your plan or not. And if your habit has always been to explain rather than examine, you'll carry that into every trade. Now consider how you dealt with boredom. In a job, boredom is common. You sit through it. You wait for the day to pass. You look for distractions. That same pattern shows up in trading as overtrading. You're not entering because there's an opportunity. You're entering because you don't want to sit still. You want movement. You want engagement. You want something to happen. But the market doesn't reward activity. It rewards patience. So if your default state is to avoid boredom, you'll force trades that don't meet your criteria, and then you'll call it experience. There's also the issue of effort. In many jobs, effort and outcome are loosely connected. You can work hard and still see average results. Or you can do very little and still collect a paycheck. That creates a dangerous belief. That effort alone should produce reward. So you sit in front of charts for hours. You analyze, you watch, you wait. And when a trade doesn't work, you feel like something unfair happened. But trading doesn't reward effort. It rewards precision. You don't get paid for time spent. You get paid for decisions made. Now think about how you handled authority. Were you someone who followed systems strictly, or someone who looked for ways around them? Because in trading, your system is your authority. And if your instinct is to challenge rules, to tweak them, to adjust them based on how you feel, then you'll do the same with your trading plan. You'll override it. You'll reinterpret it. You'll make exceptions. And each exception weakens the structure you're supposed to rely on. Here's where the conflict becomes clear. You left your job to escape structure. But trading requires self-imposed structure, not loose guidelines, not flexible intentions, clear, consistent rules that you follow whether you feel like it or not. So now you're in an environment where freedom is total, but success depends on discipline.